Hello, welcome to taxation class, and this is the eighth module, and we'll be discussing about capital gain tax and stamp duties, capital gain tax and stamp duties, and look at the meaning and scope of capital gain tax. We look at chargeable and exempt assets under CGT Act, the calculation of chargeable gains and allowable deductions, and we look at the meaning, types, and application of stamp duties and role of CGT and stamp duty in revenue generation. And when we look at capital gain tax, it's actually a tax on profit from the disposal of a chargeable asset. It's a tax on the profit from the disposal of a chargeable asset. And the key principle of CGT is tax on the gain, not the total sales price. You charge a tax on the gain and not the total sales price. And the disposal event is on the basis of sales, on the basis of transfer, on the basis of providing the asset as a gift, and on the basis of exchange. And on this basis, a CGT be charged for tax. And it has or serves a dual purpose. The first is for revenue generation, which contributes to government fund, and next is economic regulation, which influences investment and assets management decision. And then looking at the scope, a person who is liable to the capital gain tax is an individual and corporate entities realizing gains on the sales or transfer or exchange in whatsoever way of an asset. And what is tax? This is a gain from disposal of capital assets in cash or in kind. And the chargeable assets include land and buildings, which are for commercial and residential purposes. Another is the share and securities, business assets like machineries and equipment, and intangible assets like the patent, trademark, goodwill. And we have exempt assets and the computation formula. Looking at the exempt assets, these are not subject to the capital gain tax, and it includes the personal use of assets. Personal use assets like the furnitures, the personal car, these are not subject to the CGT. And another is the government bond, and another is the government bond. And when we talk about the government bond, another is the government bond and security, and another is assets transferred by inheritance or between spouses, and lastly, certain agricultural or small scale business assets. And to calculate this, it's actually the proceeds from disposal minus the base cost minus allowable deductions. Now we have to calculate the chargeable gain, which is proceeds from disposal. This is the total amount received from the sales or transfer. And we also have the base cost of assets. And these are the elements of the formula. To get the base cost of assets, it includes purchase price, the acquisition costs, which the improvement cost, and also the professional fee. And for allowable deductions, we have the likes of the expenses of disposal, the capital losses from other assets, and lastly, the relief and exemptions, which example is rollover relief. To calculate this, we have the example here, and the scenario is where commercial properties being sold for 55 million naira, and the cost is shown below as purchase price of 25 million, acquisition legal fee of 750,000, purchase stamp duty of 500,000, and then renovation of 4.5 million, sales commission of 1.1 million, and sales legal fee of 900,000. And to calculate this, we have to take the total base cost, and adding all of those costs, we have 80.75 million, and we have the total disposable or disposal deduction to be 2 million, and to get the chargeable gain, it's actually 55 million minus 30.75 million minus 2 million, and the chargeable gain is actually 22.25 million, 22.25 million. We have the stamp duty, and when we talk about stamp duty, this is a tax on legal instruments, documents, and transactions, and it serves two functions. And the first is for fiscal, is a fiscal function, which is to generate government revenue, and the second is a legal function, which is to validate documents, making them legally enforceable. And it has a key features of it's often a requisite for a document to be used as evidence in court. And we have types of stamp duty. We have one ad valorem duty, which is calculated as a percentage of the transaction value. An example of this is 1.5% duty on a 10 million property sales, which is 150,000. We have the fixed or specific duty, and this is a set flat fee regardless of transaction value. Example, a duty on the will or power of Anthony. We have the transfer or transaction duty, and this is imposed on documents that change ownership. Example, is the deed of land sales. Another is the share transaction form. And lastly, we have the judicial and financial stamp duty. And for judicial, it's actually on court documents, and for financial, on banking instruments like check, promissory notes, and the likes. We have the role of capital gain tax and revenue and the economy. The first is to broaden the tax base, and the second is to promote equity, that is ensuring those with capital gain contribute clearly. Another is to stabilize revenue, and lastly to guide economic behavior. And this means to encourage long-term investments. The role of stamp duty in revenue and economy. The first is for revenue from high value transaction, and this talks about capturing revenue from major economic events like property sales. Another role is to formalize the economy. It's perform a role of formalizing the economy, which is making transaction legal and transparent, and reducing of fraud. Another role is ensuring legal compliance, that is creation of an official record for auditing and dispute resolution. And lastly, on the role of stamp duty in revenue and economy is to complement other taxes, that is strengthening the overall tax system alongside the capital gain tax and the value added tax. In conclusion, CGT is a tax on the profits from selling assets. Accurate calculation of this chargeable gain is crucial for compliance, and stamp duties are taxes that provide legal validity to documents, and together they are vital tools for one, revenue generation, that is diverse and stable funding for the public services. Two, economic regulation, influencing investment and commercial behaviors. And lastly, legal formalization, which deals with promoting of transparency, reduction of fraud, and strengthening of the formal economy. Thank you for listening.